Today is June 14th, 2014, and this is episode 118. This program is intended for informational and educational purposes only. Cryptocurrency is a new field of study. Consult your local futurist, lawyer, and investment advisor before making any decisions whatsoever for yourself. Welcome to Let's Talk Bitcoin, a twice-weekly show about the ideas, people, and projects building the digital economy and the future of money. My name is Adam B. Levine. Today on Let's Talk Bitcoin, I'm joined by Stephanie Murphy.
Hi.
And we have special guest host with us today, Tariq Lewis. Hey, Tariq, how you doing?
Hi, Adam. Hi, Stephanie.
The content for today's episode, the real meat and potatoes of what we're going to be talking about here. We've got guest Jesse Powell, who's a former member of the Ripple board and the founder of Kraken and a variety of other projects. You've been around the space for a long time, Jesse. How you doing?
I'm doing great. Hey, guys.
This conversation, I reached out to you because I wanted to talk to you about Ripple, but, we've had you on the show once before, but I'd talk about you for a little bit, if it's okay, and talk about how you got into the space because, your name and Kraken's name specifically, these have kind of been fixtures. There hasn't really seemed like there's been a commercial success, and I'm kind of curious what your journey has been. How did you get into Bitcoin? Where did you come from on all of this stuff?
I read about Bitcoin for the first time in March of 2011. I was immediately intrigued by it. For the prior 10 years, I had a company selling virtual items and currencies for online games like World of Warcraft Gold, Diablo Swords, Platinum, RuneScape. We did 20 different games at one point. Bitcoin to me was just another virtual currency like those, but without the disadvantages and without the centralization. I thought that it was going to be fantastic, both for the world and, just in terms of efficiencies created. We were having a lot of problems in my last business with payments, and Bitcoin seemed to solve all of those problems. And I just thought ideologically, and, it was just a really interesting idea to think about what would happen if there were a global currency not controlled by any government. That's sort of like what got me into it.
So you had this other business. So was that the entry point? Did you just start accepting it with that business, or did you create a new business? What was the kind of genesis into working here?
It was a while later before that business started accepting Bitcoin, even though Bitcoin had obviously made a lot of sense as a payment mechanism for that business. The problems that it solved were transaction fees on microtransactions, just general friction in the checkout process, having to collect a ton of information about a user because of the fraud risk, the chargeback risk itself, international payments, kids not having their own wallets. A lot of our orders were coming through parents lending their kids their credit cards, which was okay maybe for one time, but the kids often would save the credit card information and come back later.
Yeah, it seems like it's the credit part of that equation that really presents the problem, is that like everybody can have money, right? So if Bitcoin is money, anybody can have money, but not everybody can have credit, because credit means someone is trusting you to then pay them for money that they're giving you in front, right? Is that the problem?
The biggest problem with the credit cards for us was that, it's a pull type transaction. We don't know if we have the owner's permission to do that pull at the time we do it. We're just trusting whoever's actually providing the information to us. At that company, we had a huge department devoted just to checking for fraud and preventing fraud around credit card payments. So, people often say that the cost of taking a credit card is 3% plus 30 cents. But for us, it was probably closer to 7 to 10% just because of the people that we had to have employed just to prevent fraud. I guess, the credit itself isn't a problem so much. Like most of these guys are probably credit worthy and we would have trusted them to pay us later if we could have actually confirmed their identity. The problem was that just anybody can show up with the ability to take out a loan against somebody else's identity.
Even if it is the correct person who took out that loan, they can still say, and it's hard to prove otherwise, that it was somebody else, right? I mean, so it's like being unable to identify positively who somebody is dangerous on both sides, because it could be fraudulent or it could be fraudulent with someone who really is that, but pretending that it's fraud.
Yeah, so that's called friendly fraud, where somebody they make an order and they decide later they just didn't want it, or, they have buyer's remorse. So it was actually the guy who used his own credit card. He just decided that he was going to try to reverse the transaction because for whatever reason he wanted the item for free or whatever. Or, in the cases of kids using the credit cards, the parent might even get on the phone with us and approve that first order and even say, yeah, I approve of the next order too. But the kid buys $1,000 worth of virtual items instead of $100 worth of items. And, and then they have a problem with that. So it's just a terrible system for buying things online.
That's really interesting to hear you talk about your experiences with credit cards. Kids, who can't really get their own credit cards was something I haven't thought about for a while. But I imagine a lot of your customers were sort of that age. What was the nature of the virtual items that you were selling? Like, could you get them back once they were sold, or were they kind of like Bitcoin where it was irreversible?
We never could get them back. They were just like Bitcoin where were irreversible. And that's actually what made some of those gaming currencies so valuable. Like World of Warcraft gold, for example, that was actually, probably still is, a currency that is used things outside of the game. And back when I was in that business, World of Warcraft gold was the currency that people would trade with on online gaming forums for services like graphic design. You find a guy or a kid, on the forums who you need to do some graphic design service. You want them to make a banner for you or a signature for your forum identity. You could pay that guy in World of Warcraft gold. And for most, that was the best way to do it because it was irreversible and you didn't need anything to sign up for a World of Warcraft account. No KYC, there was no age requirement. You could just do it. So it's sort of like the de facto currency for a lot of commerce between kids on the internet for a while.
Okay, so your first Bitcoin project, maybe we could move on to talking about that.
When I first found out about Bitcoin, I wasn't quite sure what I wanted to do with it yet. I wanted to do something. I got into mining for a little while, had a pretty big mining operation. When Bitcoin was at $1, I sunk about $100,000 into mining equipment. In hindsight, obviously, I probably should have just bought 100,000 Bitcoin.
But whoa, that's still pretty serious.
Yeah.
I mean, so Bitcoin was $1. That's an interesting time frame.
Yeah, actually, that wasn't really uncommon for the history of my last business. Mm-hmm. A lot of the items that were sold were produced through giant botting operations. Like farming for items was very similar in my mind to mining for Bitcoin.
Is it less evil?
It is less evil. With World of Warcraft.
What do you mean by that? Sorry. I don't play these games, so I'm not familiar with the process, but why is it evil?
The secondary market in most of these games, like World of Warcraft, is seen as just very negative for the games and for the economy and by the hardcore players, which are usually the kids, because the kids have a lot of time to sink into these games. And it's usually like a time-based reward system. So the more time you have to spend, the more monsters you can kill, which means the better items you can find, which means the more powerful character you want to have. Guys that don't have that much time, if they want to keep up with the rest of the players, will usually buy items. There are, I guess, legitimate reasons for doing that. Say, for example, the group of friends that I play the game with, they have 40 hours a week to play World of Warcraft. And maybe I work more. I've only got 10 hours a week to play with them. But if I want to stay at the same level as them, the only way for me to do that really is to pay somebody else to upgrade my account, to either level me up or to sell me the items that I need to stay at the same level of power as my friends so I can continue to play with my friends.
Child labor, child exploitation. I can hear it
it's
now.
An interesting question about exploitation. And I think that to this point, the rewards have biased towards people who have more time than money. But I think in the last 5 or 6 years, we've started to see this trend kind of shift because real money trading, as it's called, where you're essentially, trading money for somebody else's time in the game, and then you get the results of their time in the game, just kind of completes that equation because you're right. Not everybody does have time to participate on that level. And for some people, the time is way more valuable than the money. And for other people, the money is way more valuable than the time. So it's, it provides both sides of that equation. But yeah, looking at it from the perspective of, before nobody could pay to get ahead and now they can, it does look bad.
The hardcore guys see it as cheating. The game companies, I think, have tried to play both sides for a long time. Just World of Warcraft as an example. will regularly ban accounts that they catch engaging in real money trade. But they don't do it so severely that it makes it impossible, or, it's not a complete deterrent. It just makes it expensive to do. So I think they satisfy the people that say, hey, you should do something about this. And it's impossible to do either. And every time they ban an account, because it's not a significant deterrent, they're just selling another copy of the game. So they can say, hey, we sold like 1 million copies of World of Warcraft this month, but they don't tell you that they actually banned 500,000 accounts that month, and probably half of the sales that they made that month were just botters or Chinese guys or people who had been banned for real money trade just buying their account again. So it helps them in the numbers, it helps them appease the hardcore gamers, and it doesn't stop the real money trade from actually happening. So everybody's happy.
Okay, so tell me more about this mining rig that you built. What was it like? I mean, was it just graphics cards or something?
Well, this
wasn't
a rig, was it? This was like $100,000 back when Bitcoin's $1. This was like an installation.
Yes, it was about 30 something machines with 3 of the 6990 Radeon video cards in it. So that was like highest end video card you could get at the time. It was the best card for mining.
And where were you housing all that stuff?
So my business partner at Loot, which was the virtual items company, he had just moved to some ridiculous new house in Tennessee, and his old ridiculous house was still empty. And so we had all the stuff shipped out there, and we just set it up in his house. And it was a good thing that he had that place, because it would have been pretty difficult to find. I mean, we looked around for a while, and in California, the cost of power was too high, but it was reasonable in Tennessee, and he had all this space, and just finding that density of power was difficult. So what we ended up doing was we plugged in these rigs. We had 30 something rigs. We just plugged in all over his house and blasted the air conditioner 24/7. It was probably the least efficient way we could have done this, but we weren't sure at all. We didn't want to sign like a long-term contract with the data center or anything. And we were just like completely unsure how this was going to work out. But by the math that we had done at the time, we bought all those machines, and given the hash rate at the time, we were going to make our money back like very quickly. So we were just going to try it out and see how it goes. And if it was going well, then we would move it to a more cost-effective solution.
So you've got this house, it's full of mining rigs, you're blasting the air conditioner, Bitcoin is $1 each, and you've just, essentially spent $100,000 setting up this operation. Sure. Did it perform to your expectations?
No, because the hash rate spiked very quickly. I guess like shortly after I found out about Bitcoin, everybody else found out about Bitcoin too. So the hash rate went up a lot, like way more than it had historically kind of gone up. So I didn't predict that. The rewards were not as great as we anticipated. Also, it took a long time to get that hardware. A lot of the video cards were back ordered. And so, I mean, it's like the same situation you have now with the ASICs and all the pre-selling of those. Is that by the time you actually get your equipment, the hash rate has increased so significantly that your rewards are much less than you expected. And you were probably better off just buying Bitcoin at that time if acquiring Bitcoin was your goal.
So how long did you run the operation?
We ran it for a few months. I think we got a couple thousand Bitcoin out of it. And then we ended up selling them to this guy. It just became too much of a headache to continue to deal with. Machines were like powering off all the time. Someone would have to go over there and investigate what's going on. And video cards would have different tolerances. It got to just be a logistical hassle. So we found this guy in Washington, and there's a thread on the forums about, us trying to sell all these rigs, and there's a picture of them and everything. This guy in Washington had 2.5 cents per kilowatt hour. And that was insane. So he and his brother flew out to Tennessee, packed up all the rigs, had them shipped back to Washington. And so as far as I know, he's still running them. He actually had like a pen testing company. So he was using rigs for other stuff part of the time. So it wasn't just Bitcoin mining. And I remember he had actually lost a box. There was like a $12,000 box of video cards that got lost in the shipment. And some months later, he was actually able to track it down, I think at the FedEx or the UPS facility. But he eventually got it. I'm sure that cost him a bunch of money.
Okay, so by my mental math, this is putting us in like late spring of 2012 when you've just sold these machines and you now are out of the mining game, right?
It was probably still, this is probably still in 2011.
Oh, yeah. Okay.
This is probably late-ish 2011. Concurrently with that, we started working on a gaming forum called Ogre, OGRR. And the purpose of that forum was to encourage gamers to trade their virtual items for Bitcoin. And we had a wallet there. We had an escrow service.
Yeah, I remember that. I didn't know that was...
Yeah, it was us. So that was a lot of fun, but the marketing effort that it would have taken to get that really off the ground was kind of more than we were willing to do, and it didn't immediately.
It was pretty early too. Were you guys accepting tokens besides Bitcoin? I mean, like, were you accepting dollars or was it just Bitcoin?
No, it was purely Bitcoin.
Yeah, so that was real early for a pure Bitcoin business.
Yeah, and we'd given away 1,000 Bitcoin. We had this deal where if you're one of the first 1,000 users to sign up and make a couple posts, you got a Bitcoin. There were a lot of people that did it and just completely forgot about it. And then came back, like a year later when Bitcoin was like $1,000, and they're like, "Holy crap! Like, I have a Bitcoin."
How much was Bitcoin at that time when you guys were essentially using it as a marketing tool?
I think that it was $10. It was around there. Thinking, okay, we'll give away like $10,000, no big deal. And at some point it turned out to be like over $1 million. So we did Ogre. I think that it was too early. Also, just forums like that require gaining some significant critical mass. You need that network effect to really be useful as a place for people to come and trade, just like eBay or any other sort of.
You never feel like you hit
that? We didn't hit that.
How long was Ogre around?
I don't know, I'm going to say like a year and a half maybe from start to finish. We handed it off to some other guys towards the end, and they also just decided that they didn't want to put the effort into it. One of them is now working for us at Kraken, and the other is working on another project.
CryptoKit is the world's first Chrome browser Bitcoin wallet. It's the easiest, fastest Bitcoin wallet payment system. With a simple one-click install, it takes just seconds to get your wallet set up. And because CryptoKit finds the address and payment for you, there's no more fussing around or tab switching. CryptoKit is more than just a wallet. It comes with a preloaded PGP encrypted social network, news feeds from Reddit and Google, and up-to-date charts from exchanges. Finally, CryptoKit Directory allows you to make two-click payments with any of the BitPay merchants. Once you install CryptoKit, you won't need anything else. For more information or to download CryptoKit, visit CryptoKit.com.
Hi, Stephanie here. Would you like to turn your book into an enthralling audiobook? Need a persuasive commercial to promote your company? How about a narrator for your explainer video? Here's where I can help. I'm a freelance voiceover artist, and since 2009, I've lent my voice to dozens of audio projects. To hear some examples of my work, check out my website, smvoice.info. If you like what you hear, I'd love to be the voice of your next project. Get in touch at smvoice.info.
I'm really enjoying this exploration of your background because, again, I don't know any of this. So after Ogre, you came out of that better off than you went in, or worse off? I mean, would you consider that a win in just kind of relative terms?
It was a fun project, but it wasn't, I think in terms of business, I think it was a distraction. It was like a waste of time from what maybe would have been a better business opportunity. We did a mining pool for a while as well called Max BTC. And I think that it might have been the first or the second DGM mining pool, which was like this formula that Manny Rosenfeld created, which as far as I know is still the fairest way to calculate mining rewards. It didn't get traction. I think that it was probably too complicated for users to understand, and people were still paying like ridiculous fees at DeepBit and some other pools. But again, I think with mining pools, I think there's also this like psychological effect of having like a large hash rate that, people want to be on pool that seems like it's going to be solving a lot of blocks, whether or not proportionally it's going to affect the reward or not. We did that for a while as well, and it wasn't profitable. We didn't really see a future in becoming a mining pool. We actually thought that P2 pool was going to gain a lot more traction and just eventually become the primary pool. We thought distributed was going to be the future and not centralized pools. And I'm not even sure what the situation is with that, if they're competitive with the private mining operations.
It seems like ease of use is definitely a compelling factor in a lot of these decisions. Based on looking at the market right now, it seems like P2 pool really hasn't picked up, but it's because it has that extra burden of running your own node, which means you have to download the whole blockchain and all this other stuff, as opposed to just doing work that's fed off of a more centralized solution. Is
it the pre-selection bias, like you mentioned, Jesse, or is it actually just the ease of use?
It probably is just the ease of use for most people. I think that's probably a fair assessment.
Where are we at this point in the chronology? So you've got this pool Max BTC, and we're at kind of the end of that story. So where are we in history, and what's the next project that you move to after that?
I should have probably reviewed my own timeline before jumping on with you guys. The history is like a bit of a blur, like so much happened in such a small amount of time. But at some point, we get to where kind of the story of Kraken begins, and that is around June of 2011, when I get a call from Roger Ver, the Bitcoin Jesus from Japan.
Okay, hang on. Have we backtracked now? Have we backtracked to before any of these things, or did those things all come before June 2011?
We've backtracked now. So there was a lot of some things like overlapping with this.
Yeah, I understand how that goes.
So yeah, we had many things going on simultaneously, and at some point just kind of phased the things out that we decided weren't worth our time. From the beginning, our goal always was like just to increase Bitcoin's adoption. That's why we did the gaming forum. We thought that the gaming market was the perfect market for increasing Bitcoin user adoption because of all the problems that it solved with payments in that phase. We thought that it would see a lot more traction than it did there, and it seems like now that's starting to pick up, but I'm surprised it didn't catch on sooner, especially given all the commerce that happens in that space between China and the West and all the currency issues with China.
Looking back on it, do you think you have any idea of why it's taken as long as it has?
I really don't know. It maybe is just the younger demographic. Maybe kids aren't into Bitcoin. Dogecoin definitely skews a lot younger. That's brought a lot of new people into Bitcoin and into the crypto space. So I really don't know. And part of it may also be that there hadn't been a Chinese exchange until relatively recently. So that probably part in it as well.
So Kraken is a Bitcoin exchange, and you guys are based out of the US?
Yeah, our office is in San Francisco.
Do you accept U.S. customers? I've asked this a couple of times of a couple of different people, and the answer has been different times.
Yeah, so we do accept U.S. customers. Anybody can sign up for an account. The 5 states that we're doing national currency trading in, they are Alabama, Montana, New Mexico, South Carolina, and Massachusetts. If you're in one of those 5 states, you can have access to the full set of services for all the currency pairs. If you're not in those 5 states, all you can trade are the cryptocurrencies. So we're in California.
What cryptocurrencies do you currently trade?
So we're doing Bitcoin, Litecoin, Namecoin, Ven, Ripple, and Dogecoin.
I was just curious. It's interesting you have Ven there as one of the cryptos, just a little bit different from the others. What inspired Ven?
So we met Stan Stonaker at the Bitcoin conference in San Jose last year. It just seemed like an interesting thing to do. Stan was really cool and really into the space, and his currency was interesting. And he's actually been around for a long time. It's something like 8 years old. it's a currency that's value is derived from a basket of other currencies, including carbon futures and other stuff. And it was a really easy thing for us to add. And we always thought of ourselves from the beginning as being currency agnostic and supporting more than just cryptocurrencies. Eventually we might support other commodities or even securities. We thought it would just be an interesting thing to add. It was easy for us to do. Stan was really cool, so we just threw it in there. The trading volume has been pretty low, but it's a fun thing to have. I would like to add some other kinds of currencies like that, or even gaming currencies to the exchange as well.
We're talking about some of the other cryptos like Vend and Ripple. When you look at your exchange and performance, you say Vend is a little bit low. I mean, how does it rank? Is it still Bitcoin at the top, Litecoin, and then the rest? Or are they pretty much even?
It's Bitcoin first, Litecoin next, Dogecoin after that.
I noticed that Next has been picking up in some markets. Do you see a lot of the action on your exchange sort of tracking the markets like Bitter and any of the other exchanges that some of these coins they may have more volume?
Our volume is usually pretty consistently a certain percentage of the total market. If the total volume is down that day, then we're down that day. So we're not a separate thing from that. As far as Next, I haven't looked into it enough to know, but yeah, I agree. It looks like it's picking up volume. We try to take a sort of a wait and see approach to a lot of the new currencies that seem to be gaining traction. I think we've seen over and over that stuff looks like it's gaining a lot of traction, and maybe it does for a couple of weeks, and then it just fizzles out. Yep. We've got limited dev resources. We've got to really believe that a currency is going to be around for a while, or there's some significant financial incentive to add it early. And for most, there's not really. And we also want to be able to do a significant amount of diligence on a coin, like as we did with Namecoin. And when we did it with Namecoin, we discovered that critical flaw that could have killed Namecoin, but it seems to have, at least in part, revived the Namecoin developer community to come back and work on it again. So we don't want to add a coin that we haven't thoroughly vetted. We're trying to protect our users both from just bad coins and from pump and dumps. We think it should mean something when we add another currency.
So when we think about a currency like Ripple, what does it mean for Kraken now to have that currency?
When we added Ripple, it was a long time ago. It was very early, and the idea of Ripple was a bit different than what it has become today. We're going to continue to support Ripple. Like I've said publicly, I think that protocol is awesome. I think that the IOU system and the gateways and distributed exchange, all great. The problem for me really is just in the way that it's distributed. And so that's kind of where things have diverged from the original vision, at least the original vision when I came into it, very early on, and what has happened today. In the beginning, I met Jed at the first Bitcoin conference, and we'd actually talked before over email when I was at Mt. Gox back in June of 2011. And then when we got back to San Francisco after the Bitcoin conference, we started talking about Ripple and Jed's idea for that. And so that's how I got involved with that. And I was excited about just the idea of it, and the plan for the distribution was much more generous and much more accelerated than the plan that has been executed by Ripple Labs. We were hoping to give most of it away very quickly. Ripple Labs has taken a different approach to the distribution, which I think has greatly slowed the adoption from what it otherwise could have been.
So I think it'd be really good to go back to kind of the basics of when you were getting involved with Ripple and what sorts of things, why you were looking at this and saying, of all the things that I have available to me to do at this particular moment, this is something that I want to help come into existence. What's the vision behind Ripple Has that changed at all, or is it just the implementation that hasn't exactly been right for you?
I think Jed's original reason for wanting to do Ripple was that he hated how wasteful Bitcoin mining is. And he did some math and he figured out that if Bitcoin becomes like the global currency, the mining power, years from now is going to end up being something like 7% of all power consumed in the world. And he just thought like the future was very dismal and it was very wasteful, and there had to be a better way of establishing trust and operating the network without mining. So I think that was the impetus for it. I did see that as wasteful, although I didn't agree that it was necessarily a problem. I saw it more as the price you pay for the best currency ever. But
even with your experience with mining? Yeah,
I mean, of course, that level of power consumption would be extremely wasteful. But I wasn't thinking that we totally had to do something about it immediately. I guess I was that probably something else would come along or something would change to make that more efficient. But I did see mining back then. The problem in my eyes was the 51% attack, the network being attacked by a malicious government. Because back then it wasn't very hard to do. It was going to cost something like $25 million to take over 50% of the network, so for a government to do that would have been nothing. That to me was like the more immediate problem. Of course, the power consumption problem years later would have been an issue as well. But Ripple solved both of those problems, without mining. You didn't have the 51% attack, and you didn't have the wasteful electricity consumption.
So now Ripple, as you're talking about it, I'm familiar with this, but there was a Ripple that also was Jed's project before this. Ripple as a project was started in the mid-2000s, right?
It wasn't Jed's project. A guy named Ryan Fugger started that. The way that the original Ripple worked, it wasn't decentralized. You had to have like these centralized authorities kind of over who was owed what. It's very similar to what exists today with the IOU network and the trust system, the trust lines and all that stuff. And trust played as a use for the Ripple that we have today. But that was a big deal in the beginning.
The Ripple of today has moved away from the trust lines, the idea that community and people that can essentially lend each other money as sort of decentralized lending format. Is that no longer part of, from your perspective, what Ripple is about today? I don't think that
it's about that at all today. I think that Ripple Labs has shifted more to focusing on the gateway system and the creation of IOUs through that.
So question, hypothetically speaking, if I were to fork Ripple right now and go back to that community model, would you list
potentially? For me, I would want to see if we were to list a Ripple fork, I would want to see a predictable distribution model that made sense.
What would that look like if you could describe a predictable distribution model?
I think that you could either find a way to introduce mining. Maybe you could have some sort of contract that ties a distribution of Ripple coin to coin on some other crypto network, like to Bitcoin mining or to Dogecoin mining. You just explicitly state how you're going to give away the coins and what the schedule for doing that's going to be. And if I trust you, then that would be enough.
That's a really interesting point that you bring up, is that, for me, certainly that was my single largest and primary complaint about Ripple, was that it had this gigantic chunk of coins that there just was no stated plan for. And so because it so outweighed the size of the market, it was impossible to look at the tokens and say, okay, well, these will behave in any sort of way that I can anticipate, because I have no idea when this huge black swan event where all of this stuff suddenly becomes available where previously it wasn't. Somebody's going to know about that in advance, but chances are pretty good it's not going to be me, and so I'll be the loser in that situation. It seems like that was one of their biggest problems with adoption, just at its core.
So a lot of people had trouble getting over that, myself included. And, in the beginning, there was a plan to give away most of the coin very quickly through Facebook giveaways, through other social networks, through like random airdrops, and there were a ton of crazy plans, but they were going to happen very quickly. Like within a 3 to 5 year period, basically all the coin would have been given away.
Hey listeners, the world is aflame with concerns about 51% attacks and mining centralization. You've asked us to do an in-depth episode not so much illustrating the technical problems as highlighting real and lasting solutions to this issue. The only problem is, we're not the experts here. If you're working on a solution to the mining centralization problem, whether it be a proof-of-work switching algorithm, tree chains, or whatever, send an email to apply@letstalkbitcoin.com to schedule an interview that may be included in our upcoming mining solutions episode. And I've been meaning to mention, you remember LTV coin? We're in the final preparation stages and are testing out our mass distribution tools on the real Bitcoin network now. There will be a full episode with all the details soon, and I'll be very pleased to share our work with you after this long wait. That's enough out of me. Back to the show.
Ripple Labs has two problems, really. One, Jed and Chris gave themselves, and with Arthur together, all have 20 billion XRP. I think the amount of XRP that Jed has said he's about to sell is greater than the total amount of XRP that has actually been given away to other people.
So you were a member of the board of Ripple Labs, and recently, these problems became big enough that you decided to resign. And also, as you're mentioning, one of the founders, Jeb McCaleb, also announced that he hasn't been part of the project for a while, but he still has all of his tokens, and now he's going to be selling his tokens over a period of time. Can you talk to us about how that happened from the inside?
Jed, obviously he's been involved in the company from the start. At some point, hired Chris Larson on to be the CEO of the company. When that happened, those guys allocated themselves any sort of lock or vesting period or anything like that. They just they had it and they could do anything with it at any time. Time went on. I obviously had a huge problem with that when I found out about it. I thought it was going to be a huge problem for being willing to accept that and want to adopt and support this protocol. So time went on. I thought eventually the guys would realize that this is a huge problem and they would just give the XRP that they had back to the company. Time went on. They didn't do that. Jed actually had said that he would give back his XRP if Chris gave back his XRP, and Chris wasn't willing to give back his XRP. Jed sort of was committed to holding on to his XRP just to be able to use it as leverage to get Chris to give it back at some point.
I find it funny because in the beginning, when I first became aware of Ripple, maybe a little over a year ago, I guess, XRP was never really meant to be a value token. It was supposed to be made the Ripple network work. It wasn't supposed to be something that had a lot of value or was almost acting as equity in the company, right?
That is the pitch that they've given, but I think it's pretty clear that they depend on that XRP in part to fund the company, and they do see it as a currency on its own.
This has always been one of the kind of schizophrenic parts about the Ripple, public relations, is that on the one hand, it's it's a stamp. And then on the other hand, it's okay, well, you can go buy some now if you want to appreciate along with the company. This was just an incongruity that kind of never got itself sorted out.
It's one of those crazy things that I'd always had a problem with. It. I knew it was a problem for the company. I knew it was a problem for adoption. Obviously, as big of a problem as two guys having 18% of the total money supply. The bigger problem was still that Ripple Labs had the rest, and there wasn't a transparent plan for distributing that.
So one of the things that Ripple Labs has done is, I know people who they've given Ripple to. They give it to developers when they go to, like a seminar or something like that, or they'll have workshops. And basically, does seem like they're giving some of it out, but it's just like, it's that big numbers thing, right? It doesn't really matter if you're giving out hundreds of thousands at a time or 50,000 at a time if the total quantity is in the hundreds of billions of units.
Yeah. What is it? What have they given away in terms of a percentage of the total? It's tiny.
Right. Exactly. It sounds like Jed's actions and your kind of continued questioning about these strategies and it seeming like they weren't changing. It seems like that kind of catalyzed this action for you. Yeah, there's been some other things that I wasn't happy with that happened. Just kind of some treatment of some of the employees that caused a few employees to quit the company. There's some treatment of another board member that was there very temporarily. That stuff. And then,
but Jesse, would you say that Ripple still is a success? It has attracted, major players such as Merriman Capital, even Crosscoin Ventures. May have diverged from the original mission, but it seems to be growing as a success and acquiring the attention of large institutional players, which seems to be a good thing and possibly overall rewarding.
Yeah, it might very well be that this approach turns out to be a winner for them. I don't think that acquiring the attention these guys is necessarily, it doesn't constitute a win. I think they've got about 90,000 wallets created so far. How many actual users? I don't know, but maybe a safe estimate is something more like 50,000. That's relatively small in terms of the adoption of a cryptocurrency. What do we think that Bitcoin has, or what do we think that even Dogecoin has?
Right, the Dogecoin subreddit is more than that.
But doesn't it also act as a back end for other services that do have more users?
Not that I'm aware of. I know they've announced the intent to do something with Fedor Bank recently, but I think that is still a long way off from being a reality.
Jesse, let me talk to you about some of the fundamental, the decision that was made here, because you mentioned that the part of the vision that you liked was this kind of person-to-person credit system, right? Is that a fair assessment that that's one of the parts about this project that you like and you feel like has been sort of downplayed?
I wouldn't say that was the biggest thing for me. I did think that was really interesting. It maybe could have been a replacement for Hawala, and it was definitely a better way to do Ripple that Ryan Fugger had started out. And I don't think in the beginning we actually had this concept of gateways.
It feels to me like there's a little bit of a mismatch with the market that, with the Bitcoin market and with some of the products that Ripple is providing. So to a certain extent, it kind of makes sense to me that they would go after gateways because they've created a system that looks very much like the banking system, except it's a lot more efficient and it's a lot faster and it's a lot more efficient. So why wouldn't it make sense to go to that type of user first and say, hey, we can solve your problem, which is that you're doing this and it costs more than it should. We can save you money. Why isn't that a good strategy when the problem is friction into and out of fiat currency? That's what a gateway is, right?
It's just a way to get some physical asset onto the Ripple blockchain.
So these are the issuers. So it's a decentralized issuing system. And then these issuers, okay, I think I understand. So what's the problem with going after that type of user? Was it that if they were going after that type of user to the exclusion of smaller normal users, or just in general, do you think this was not a good approach?
I think it's an interesting approach, and I'm glad that somebody is doing it. Somebody's putting all this effort into biz dev and into preaching the word of crypto to all these institutions. I think that's a valuable service to the community. But I think in terms of a business, I think so because Ripple's open source, there's nothing stopping somebody from forking Ripple. Like Tarek just said, he's going to go fork it. What if Tarek did what people saw as a more fair fork? What would be the switching cost for all these institutions who to date, are just thinking about it? What if there was another version of Ripple that had like 10 times the user adoption?
So they're not vesting people and they're giving away the sauce.
I don't see how it's really sticky. I can understand you've got some interest in the XRP that you have on the existing network, but you've also got this huge risk that, Ripple Labs is going to do something with the other, I don't even know how much it is, like tens of billions of XRP that they've got. You have no idea what's going to happen with that. And so the currency, the price might be stable today, but who knows what'll happen tomorrow when Jed sells all of his XRP. He said I'm going to start selling in 2 weeks, and I think yesterday was the end of the 2 weeks for him. So he also didn't say on what sort of schedule or, what velocity he was going to be selling the XRP. So maybe he's just going to start selling 10 XRP a day for the rest of time, or maybe he's going to dump it all in one day. We don't know. But again, like, unpredictability is just like having a gun to your head. I think it's probably worse even that it doesn't just dump it all at once, because we always have to wonder, when is Jed going to dump all his XRP?
Right, exactly. It might be a crash if he dumped it all at once, but then it would be over.
Exactly.
The market would adjust and it'd be real.
Like wild man out there who with the ability to manipulate the price. So it's not something that I would want to buy into at this point. And if Tarek went out and forked it and said, here's exactly how I'm going to distribute, and you can trust me for these reasons and whatever, like, I would much rather have my XRP, my coin on that network than on this unpredictable Ripple Labs network where Jed and Chris have like the nuclear option basically. And we don't know what they're going to do. And then the IOU system, if institutions actually do adopt Ripple in some capacity, I think the switching cost for them is very low as well. And if they don't see XRP as a currency, maybe it doesn't matter to them. Maybe they can, but then that piece of it doesn't really benefit other people very much either, right? Then they're just using it as a messaging system, and their demand for XRP is just, it's tiny. It's whatever they need for messaging. It's not going to really otherwise increase the value of the XRP on that network. So I think what you'll probably see happen is eventually some fork will gain a lot of traction, and everybody's going to shift over to that, and the gateways are going to support that as well, and then everyone's just going to move over to the fork.
From an underlying technology standpoint, this is actually solid tech. Over the last couple of weeks, I've been looking back into the way that they're doing user-created assets. And again, it's really pretty high level. The tools that they have are quite good. And yet, whenever I hear about Ripple, I'm not hearing about the tools that I have to create user-created assets and do all of this other stuff with, or the fact that I can create an asset and then I can sell it in Ripple and basically accept any type of currency that can be accepted by a Ripple gateway. So, there are all of these really interesting kind of ease of use features that seem like have been, in fact, built into Ripple just by nature of the technology. And yet, there are all of these problems because of stuff that's ancillary to the technology.
Stuff has been a huge distraction for them, and it's not anything they couldn't solve this afternoon. They could release their plan for distribution later today. Jed could sell off all his XRP. Chris could give it all into a nonprofit foundation that also has a predictable sales schedule, and then we could all go on appreciating the protocol.
Is it safe to say that that's the secret sauce here, is just coming out with a plan? The details of the plan almost don't matter so much. It's just the plan and then sticking to it. I
totally agree with that. I think predictability really is what's valuable about Bitcoin. It's what I dislike about the Federal Reserve. I don't know how elastic the money supply is going to be on any given day. Yeah, I think predictability is what allows people to invest in something.
Jesse, you've been in the space for quite a long time, and before that, you were working in a token space before Bitcoin was even around. So, given that history and what you've been through over the last 10, say, years, is there any guidance or just like absolutely don't do this or absolutely do this best practices that come to mind as really generally applicable things?
I'm going to quote Jared Kenna from TradeHill and say, do not start an exchange. Probably starting a Bitcoin business with the United States as your focus would be a bad thing to do at this point. Taking customer deposits is generally not worked out well for people.
Don't build the types of businesses that you've built in the last couple of years.
Are you saying this all because of from a legal standpoint that it can get you in trouble, or
the United States is just one market. And I think that the legal headaches here at this time probably aren't worth the opportunity. Like if you've got a business and you're just trying to get to product market fit and you just want to see if it works. The United States isn't the place to do that, because you're going to start off day one with like $1 million legal bill, and you're going to spend all that just to find out that you can't do anything legally. And then it's going to cost you, another couple $1 million to get all your licenses and time to do it legally. So I would say avoid the United States if you're just starting out. Like, don't even think about it. Wait until you have a product that's working, and then think about entering that market. And in terms of taking customer deposits, I think if you can, there's some interesting multi-sig services being developed. Crypto Corp, Ryan Singer's company from Trade Hill, is doing interesting stuff. BitGo, you might be able to get a deal with a wallet like Zappo that would hold customer deposits for you. There's Hash Trust that's doing multi-sig. So I think that if you can find a way to get multi-sig into your model instead of actually holding the coins yourself, then you'll be much, much better off.
Thanks for listening to episode 118 of Let's Talk Bitcoin. Content for this episode was provided by Jesse Powell, Stephanie Murphy, Tariq Lewis, and Adam B. Levine. This episode was edited by Adam B. Levine and Denise Levine. Music for this episode was provided by Jared Rubens and General Fuzz. Any questions or comments? Email Adam at letstalkbitcoin.com. Have a good one.